Ladies and gentlemen, good day and welcome to Prestige Estates Projects Limited Q4 FY23 earnings conference call hosted by Axis Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Samar Sarda from Axis Capital Limited. Thank you, and over to you.
Thanks, Sanju, and good afternoon, everybody. Thank you for taking the time out. We have the senior management of Prestige Estates with us, led by Mr. Irfan Razak, the Chairman and Managing Director, Mr. Venkat Narayanan, the Chief Executive Officer, and Mr. Amit Noor, the Chief Financial Officer. Handing it over to them for the initial comments. Mr. Razak, over to you.
Thank you. I think I will ask Venkat to give the opening remarks. Yes, there's a lot has happened during the quarter, and I think it's the financial year end also. So the numbers are all there for everyone to see. And whatever we set out to do during the financial year, it gives me satisfaction to say we over-exceeded our target. And hopefully we'll keep doing that. We'll keep exceeding everybody's expectation. That's our job, because the whole team is on the ball and they definitely want to keep performing, and that is what is keeping us going. With this, of course, all of you will be quite curious to know about yesterday's news of the acquisition of the 50% stake in BB Realty in both the office assets. But that's also, I believe, is a strategic move which will help us to do our job easily. And also, I think it's a win-win for both parties. I think more about it, Venkat will tell you, and I will just ask Venkat to give us the opening remarks.
Thank you, sir. Thank you, everyone, for taking out time to be on this call, and very happy to take you through the operational and financial performance of the company for the FY23. It's been once again a remarkable year for us. We did cross the milestone number of 10,000 crores last year, as you are aware, and some of you did ask questions saying that, okay, now that you reached that magical number, how will you sustain and how will you grow on that number, and what will be the strategy? And we did give out a strategy last year itself, saying that the new contributes to the growth, and rightly so. Mumbai registered a little over 2,700 crores of sales. That helped. Between Bangalore, Mumbai and Hyderabad, majority of the sales for this year have come. Also, important thing that I want you to take a note of is 60% of our sales have come from Bangalore, and 40% all other branch offices have contributed. I think going forward, there will be further increased contribution from regions of Mumbai with the new launches that are coming up. There are 2 new launches that are 3, in fact. Next phase of Prestige City Millennium, Prestige Ocean Towers at Marine Line, and Prestige Nautilus at Worli. 3 new projects lined up. So Mumbai should give better numbers this year. Hyderabad, we have again Prestige City. As we told earlier in the call, Prestige City as a brand is something which we are going to launch in all the cities that we are operational, one after the other. This will be anchor development for that particular city, and these are large in size and mixed-use development. Prestige City at Hyderabad will get launched soon. Therefore, contribution from Hyderabad, Mumbai, and Chennai will have. This year, we didn't have sizable launch in last couple of years. We'll have a large project that is getting launched, Prestige Pallava Gardens, which is over 2.5 million square foot. So even Chennai will start contributing this year. Overall, in spite of clocking 25% growth numbers, and closing the year close to 13,000 crores of resales, next year is even more exciting with the kind of launch pipeline that we have. And other important aspect is collections. Some of you earlier used to ask questions when he's at the sales and, you've seen some of the developers, you compare and ask, is there any bulk business, etc., and all that. So to put everything to rest, you see the collections, they are almost commensurate with the sales that we are doing. So that means our collections are prompt, they're collecting all outstanding, they're not much. And they are close to 10,000 crores, 9,805 crores, 10,000 crores of collections from residential projects, up by 31% year on year. This quarter we have seen highest ever collections made in any quarter. Realizations also have gone up, and among the other things, we had, I think after the end of financial year, we had a new boutique resort hotel that is opened up. This is Mulberry Shade at Nandi Hills, closer to JW Marriott. You all know that JW Marriott at Gulf Share has become a landmark project. It's a dress maker, and most of now events that are happening in Bangalore are outside people coming and having it as a destination, a wedding, a destination event. We're very happy with the kind of response that hotel has received. And in addition to that hotel property, we relaunched Forum Mall at Prestige Falcon City, which met with great success. And in fact, weekends we are seeing a phenomenal amount of crowd, people visiting mall in spite of cinemas not yet being operational. We also had soft launch. We have handed over the property Forum at Kochi for fit out, which is again a large mall. So these two will be operational. Last year we also opened Forum Rex, which is a boutique high-end mall, which had cinemas which are exclusive in the form of director's cut. So malls are back, hotels are doing well, office space leasing has been good. We're happy to tell you that whatever the buildings that we have been constructing at Pune, it's been completely leased out, close to 1 million square foot at Kharadi, and various other places in Bangalore. The leasing is ongoing, and it's been good. So we have in Hyderabad a project getting completed, and a few others in Bangalore. We are very confident that we'll be preferred office space supplier for most of the MNC companies, given our relationship, given the quality of the building, and given the specifications. And the residential is what we have spoken about. And most important, as Chairman mentioned in the opening remarks, is a strategic acquisition that we have done. And before I get into financial performance of the company, maybe I'll spend a couple of minutes explaining to you what it is and what have we done. Initially, when we got into these transactions, a project at BKC and project at Worli, both commercial projects, there were issues on ground. There were other shareholders in the SPV. So let me talk about BKC. There was a Island Affairs as a shareholder. There was a Trinity German Fund as a shareholder, and this was in a way in an NCLT. There was tenants on the ground who need to be vacated. Of course, there was no planning. There was no approval. Now, from then to now, it's a completely cleaned up site. Most of you must be visiting BKC areas. Signages are done. Work has started. Designs are frozen. Approvals have come. The other shareholders have been exited. Completely cleaned up, and work started. Approvals are in place. Now, we thought to give a boost to our annuity portfolio, since our JV partner wanted to be light on debt, and he had other challenges to address and deal with in terms of his obligations to it, etc. The opportunity came by to acquire their stake and become 100% owner in both the SPVs. We thought it is, given the fact that the project work has started and it's only construction that we need to do, and which we have been executing and delivering. You all know, last 5.5 years we have delivered 90 million square foot. That's our forte, given the teams that we have. So therefore, we said it's a strategic acquisition. It will help us grow annuity portfolio faster, and these are marquee assets. So we did some valuation and acquired the stake in both the SPVs by paying out 980 odd crores here and 198 crores in Turf Estates LLP. And with the kind of buildings that we're making there, and we definitely see that the rentals will be definitely higher than what we are presumed for valuation currently. And also the cap rate compression will happen. Right now we look at them at 9.5% of cap rate at the time of valuation. So I think by the time building is ready, the cap rate can be 8%, maybe less than that. That itself will give substantial valuation upside. We looked at rentals around 275, 300 levels. We firmly believe that rentals could be between 325 to 350. So rental upside, cap rate compression, both put together, both the projects put together, will have a valuation upside of almost 3,500 odd crores. So therefore, we felt it good acquisition, and we went ahead and completed the transaction. I'm sure you will also appreciate the reasons and merits behind doing this transaction. Of course, in the Q&A, if you have any issue, any further information that you want, we will definitely discuss it. Moving ahead, we had remarkable amount of launches this year. I don't think any other developer would have launched in a year 27 million square foot. So that's what we launched last year. 17 million square foot comes from residential, and almost 10 million square foot comes from capex. It's up 57% compared to last year. Even completions were very good. We completed 16 million square foot of area last year, majority of being residential. And an average, including holidays, Sundays, weekends and all that, we had a good run last year, sold close to 26 units a day, to 9,644 units overall. The segment that has sold well and contributed significantly is the segment of 80 lakh to 1.5 crore bracket. That's the new affordable taxable income segment. And moving on to the financial performance of the company, we had overall revenue of 8,772 crores, up 33% compared to last year, and EBITDA of 2,543 crores, and PAT at close to 1,000 crores, 11%. This is for the year, and for the quarter we had higher PAT on an exceptional item being coming to the accounting. So we also have given out segment results for you to see, and what is the return on equity and return on capital employed that we are making between office, retail, hospitality, services, and residential. Retail, just because one of our large malls got completed just closer to the end of fiscal, and it has not run a full year. So you see the returns being lower. Next time we'll analyze and probably report. If you analyze them today, even returns are high. Office gives us ROE of close to 60%, retail at 40%, hospitality at 10%. Services, of course, there's no investment, so higher. Residential at 35%. And overall, the capital employed has been earning well for us. With this brief, would like to open the forum for question and answers.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes on the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Yeah, hi. Congratulations, Irfanji and Venkat, for this deal.
Thank you.
So my first question is on the total payout is 1176 for both the deals. So can you break it up because we have already given some advances on behalf of the partner in terms of getting approvals and all. So what will be the actual cash outflow out of this 1176 crores?
All that has been taken into consideration, and net payout is what we have indicated.
So 1176 is the cash payout, and what would be the overall commitments you would have done, like in terms of earlier on behalf of partner?
So there are two ways of looking at it. If you consider them as 50% partners, now we'll have to have spend in addition to the payouts that we have made to them, 50% of the construction cost and premium.
So the understanding is that construction costs will be incurred by us anyways, and only the approval costs and clearing of costs.
Now let me take you through that mechanism. So let's look at BKC.
Yeah.
So a construction cost and the money that we have spent to buy out the earlier shareholders, both put together, earlier 50% had come to us at 2,250 crores kind of a valuation. Earlier, entire construction cost of 2,000 crores being borne by us, and the money that we have invested to buy out. So that was earlier 50%. Now, if you look at the entire premium money will be borne by us, and also there is a cash out that we need to give. All put together, and the earlier premium that we have paid, all put together, this obligation, including the cash payout, is going to be at around 2,200 crores.
Basically, you're buying out effectively at 2,200 crores for 50% stake.
Yeah.
Indication. Okay.
Because premiums to be paid and all that. So I said there's no much difference between earlier and now.
Okay. And what about the Mahalakshmi one? Because as I looked at the valuation, so BKC only comes at 1956 crores and the Mahalakshmi at 400 crores. So I just look at 50% buyout. That is the reason I was delving into like what's the potential.
Higher because it's a taller building. And rentals, we have factored in at least 25 rupees difference in terms of both, almost areas are same. Taller building construction cost is a little higher, and the rentals we have taken 25 rupees lesser. So therefore, the valuations are different. There again, I mean, if you look at the numbers, we have paid 198 crores, and the premiums of 1,200 crores, and the LUC of 200 crores, and the rehab cost of 150. This is what we'll assume freshly. That will come to that around 1,800 to 2,000 crores, that number.
Okay. So similar kind of a number there also. So almost 2,200.
We have paid to buy 50% was also entire construction cost was us and half of rehab cost. That makes it around 2,350 to 2,400 crores. So what we had got earlier versus now are almost same. Primarily because, as you mentioned, whatever the outflow was there with respect to earlier premium payment also, as you are aware, we only have paid. So therefore, not much change to the numbers then and now.
Okay. So my second question is now on these two assets we have invested significant 100% kind of stake. So any plans of like monetization of this stake going ahead, because these two are very significant assets and give them upwards of 1,200 crores annually. So any thoughts there? How do you? I understand that you were earlier looking at financing this at 50/50 debt equity. So how do you, with this change happening and now being a prestige project, so how the outlook will change towards the financial closure of these assets, execution of these assets, leasing, and even monetization? So any thoughts there?
I mean, prior to doing the Blackstone transaction, we did look at monetizing those assets by going to the REIT, combining retail as well as office. Probably would have done first hybrid REIT in the country. Right now, when we are acquiring, we're not thinking of divesting. First and the foremost step is to increase the pace of construction and ensure that buildings come up faster and are visible. And post which we'll see there is always a premium for completed building and higher premium for leased buildings. So we'll play accordingly. Right now, there's nothing strategic dilution talks that are happening. None.
Now, both these projects are financially closed now. I mean, the loan has been tied up and the work has started at both the sites.
It started for anyone to see. Financial closures are done. So therefore, that's what I said. Next 36 months, we would want to work within complete BKC, and maybe 42 months tough.
And this is the last question on residential business in Bangalore. We have seen a decline YOY for the full year FY20 to 23, while other markets have contributed to the growth, as in Mumbai. But so how do you see the Bangalore market now in FY24?
It's not a decline because there was no demand. It's a decline because we didn't have inventory, because those got delayed. And there's a lot of inventory that's going to come in from the Bangalore market. Recently, we did a launch called Prestige Lavender Field. That's again light field, 1,400 units. I think it's about 4 million square feet. Fully 3 million or 4 million. Just check that up properly. 3 million. But the entire thing is sold. So that's the type of demand we have. Unfortunately, we didn't have inventory. In fact, in Bangalore, even ready inventory, because the only two geographies where we have ready inventory is Bangalore and Hyderabad is also like nil. Bangalore is also as good as nil. And the thing is, we are working really, really hard, pressurizing to see that we get the approval, file for ERA, get the ERA number and launch. I think what Venkat said is we did a lot of launches, but then there were in the other cities like Mumbai and Hyderabad. Bangalore was soft on launches. Hopefully this quarter we did Prestige Lavender Fields. In the next 2-3 quarters we'll be getting a host of other launches because there's a huge visibility of getting these approvals soon. So that's it's all a function of the inventory that's available. In fact, if we had really launched what we were planning to, we would have crossed in this fiscal itself, that is the last 23, crossed 15K, but unfortunately we couldn't do that, and that differential would have come from Bangalore.
What's the target this year? Like in FY24, you're looking to develop the pre-sales guidance?
I believe we can easily safely look at a 25% increase.
Okay. Okay, sir. Thank you and wish you all the best.
Thank you.
Thank you. Next question comes from the line of Pritesh Seth from Motilal Oswal Financial Services Limited. And also, please restrict yourself to 2 questions. Thank you. Please go ahead.
Sure, thank you. Thank you for the opportunity and congrats on the great year. Firstly, just few clarifications on this DB realty deal again, transaction again. So one is, does it change our CapEx outlay from here on, which is 15,000 crore? So as you said, we were earlier 50% partner with the CapEx. Rest 50%, should we presume that we are paying it upfront with buying out this stake?
No, not really. So in fact, the clarification that I said earlier also, as for the JV understanding, the construction costs were to be borne by us. All the premium, LUC and portion of rehab related costs were to be borne by the partner. Now, construction costs, whatever we were anyway earlier was to incur, is over a period of time linked to progress. Even the payments, rehab and LUC are also staggered over a period of time. In fact, the transaction is come at a time which is going to help build our annuity portfolio. Even from partner point of view, if that stayed invested, they have to bring a lot of money for the premium and the rehab for construction and LUC payments and all of that. As against bringing in money, they are actually taking out close to 1,200 crores. It will help their cash flow. When we are structuring the deal, because these lands were held by them for quite some time, they were a little attached to the land. So we did mention, saying that given this situation, it is mutually beneficial. Once the projects are ready, and if we have money at that point in time, fine. You can buy the area. So, if you're looking at selling, you're evaluating selling to somebody else, and you've been the partner before, at that point in time, prevailing, you can buy the area. That's how we structured the deal. I think it's got a great potential and value upside, and it's a win-win proposition.
Sure, sir. No doubt about it. But just trying to assess what would be the additional payouts apart from this 1176 crore from our side.
Payment. Won't be any other payments except for the premiums which they have to pay. Now the other thing is, now Venkat says emotional, this, that, but ultimately I think knowing them and knowing their mind, they will take this money and come back to us and give us the space. So that we've already sort of scale. Ultimately,
sorry, I think line is not clear. Voice is cracking.
Yeah, Venkat.
Hello? Can you hear now?
Yeah.
No, I was mentioning when we are structuring the deal, it is of course win-win because we want to consolidate and they have a requirement of money to fulfill the debt obligations. So it helps. But, during the transaction, the discussion came out, they somehow want to have some area. So in the conversations, we did mention saying that once the project is complete, we have a cash flow. At that point in time, what is the prevailing market price? We are free to buy the area. So, if you're looking at the divesting to anybody else, why not you? That's how we had mentioned. That's what Sardin was reiterating.
And how much would be the additional premium payment now that would be required?
I just gave out the numbers, right? 1,200 crores overall, including what we have already paid, overall premiums are 1,500 crores, and rehab and LUC charges of another 350 crores. So the total, in addition to what we have paid, is going to be close to 1,800 to 1,900 crores.
Got it. And plus the 1176 crore addition that we have to buy.
Of that, we have already incurred close to 1,000 crores because we availed that 50% scheme and paid the premium.
Okay. So balance there is 800 crore and then 1176 crore additional for buying out the stake.
Absolutely. Whatever you said, that's correct.
Okay, perfect. And just last on, I was trying to reconcile the net debt increase for the quarter, which increased by 1,400 crores quarter on quarter. While, the cash flows that you have given indicate that, the net deficit was around 400 crore. Since we generated OCF of 1,500 crore and spent 1,900 crore in investment. Some of it is obviously with regards to the interest outflow, but can you help me reconcile the balance part of it?
You want me to run you through the debt? See, increase the net debt primarily, there is a large payout towards this transaction.
So we have already paid it, and that's reflected in net debt, is it?
It's right. So earlier, the premiums are also funded by us, and some of this consideration has already been paid. Most of actually, this money that we are talking about has been paid. I'm just getting the cash flow.
Okay.
So if you look at overall 12 months cash flow, 11,000 crores of inflow. On that construction cost, we have spent 4,262 crores. And landowner payments, sales, marketing, admin, everything put together 2,700. That totaling to 7,000 crores, and we have surplus of 4,000 crores. Yes, that 4,000 crores. Now, what is that the exact query?
Sorry, Venkat, I was just talking about the quarter. For the quarter, I can see 1,500 crore of operating cash flows, 1,900 crore of spends. So 400 crore of deficit. Debt has increased by 1,200 crore, 1,400 crore quarter on quarter. So I was just trying to reconcile whether it's because of there would be obviously payments outside of what we have given in cash flows. So what are those?
Hitesh, we have made some partner payers, the minority interest in certain SPVs. We have made payments to them. That was around in the tune of around 300 CR, 250 CR. Apart from that, the cash balance also is reduced. So what we have given in cash flows is only the operational and investment activities. The financing portion we have not given. In that, the payments to partners and all that is captured. That has resulted in an increase in net worth.
Oh, sure, but
we'll add that also and give it to you. It will be holistic.
Sure. And if you can also add interest outflows to that cash flow, so that would be very easy for us to.
Under financing activities, the amount we bring in that head, automatically everything will get.
Okay. Thank you. That's it from my side. All the best.
To primarily demonstrate that our developmental business is cash flow positive. So that was the objective. Now we'll also anyway give you comprehensive.
Sure. That would be it. Thank you.
Thank you. Next question comes from the line of Murtuza Alsiwala from Kotak Securities. Please go ahead.
Yeah. Hi, sir. Sorry, just want to delve a little more into the acquisition itself. So on a gross basis, the 5 million odd square feet would have 2,000 crore of rentals. You said the premium was about 1,500 crore, rehab cost is about 350 crore. Can you give us specifically the construction cost for this? And out of all of the cost, how much have already been spent? And is there any debt on these two entities just yet?
Construction cost on both the projects put together is 4,200 crores.
Yeah. Which takes a total cost of roughly 6,000 odd crores, premium, rehab plus construction.
Correct.
And
then you are adding up everything, then you should add up the rehab construction that we have to do, which is at the 350.
Yep.
And premiums I mentioned to you, saying that around overall paid and balance to be paid, all put together will be in the range of 1,800 odd crores.
Okay.
And there is LUC charges of 300 odd crores.
Okay.
And we also considered some interest in overheads and everything.
Sure. And how much has been spent? So I'm getting an aggregation of roughly 7,000 crore. How much against this 7,000 is already spent?
Little over 500 crores towards construction cost.
Okay. And is there any debt?
No.
Nothing. All right. Thank you so much, sir.
Thank you.
Thank you.
You're talking about external debt, right? Not intercompany debt.
Thank you. The next question comes from the line of Biplab Debbarma from Antique Stock Broking Limited. Please go ahead.
Good afternoon. Congratulations for the excellent FY23. My first question is pertaining to these transactions only. Till date, sir, how much cash flow has gone out in all from advance, that is with loans or something, for this BKC project and AlphaStreet?
What has been drawn out? Sorry?
How much cash flow has gone out from Prestige for these two projects, including
two projects so far?
Cash flow that has gone out from Prestige for these
Right.
two projects. Total cash flow for whatever maybe they use in all forms, how much cash flow has gone out for these two projects?
I'll tell you. Little over 3,025 crores, including the payment that we made just now to buy.
200 crore, including the payment.
Including the payment of yesterday's transaction,
Okay.
3,025 crores.
Okay.
Around 3,000 crores.
Yeah. My second question is on that second project in BKC, Prestige 101Y. That is not part of the transaction. What is the status of that project and the structure remains same in that project?
But these are two different companies. The projects are next to each other, therefore we call it as a by one single name 101, but they are differentiated by X and Y, nomenclature-wise. The shareholding pattern is completely different, and in terms of sequencing also, we would want to build this first and move on to that. Step at a time, we have done this, and we have some more work to be done on ground with respect to Y project. So as of now, X and Turf are the transaction that we have done.
Okay, that project, the site is not in the position, entire site is not built.
It is in position. It is in position. Plans have been submitted. Approvals are underway. But we don't want to build entire 4.5 million square foot at one go. So this will happen first, and the other one will start a little later after this comes.
The site is clear, sir. That right?
Sorry.
The site is clear. The Y.
Yeah. You see, so we have fenced and we put hoardings there. Internally, strategic planning is that we wait for next building to come above ground and then start building.
Thank you.
Y building will also have a hotel.
Okay, sir. Thank you, sir. All the best.
Thank you.
Thank you. Next question comes from the line of Manish Maheshwari from Manu Group. Please go ahead.
Hello.
Yes,
hello. So, congratulations on the great set of numbers. So, what is our rental income for FY23 that we have reported?
300, no?
In the books or exit rental income for a year?
Exit.
$210 crores. 210 crores from office and
300 crores all put together. We got retail out.
Retail of 186.
186.
Close to 400.
Total, right?
Yeah.
And sir, how is the residential for FY24, specifically for FY24, how is the residential pipeline looking like for a market like Bangalore and Mumbai?
Quite bullish, sir. Quite strong, quite bullish, and there's quite a big pipeline also this financial year in Bangalore as well as in Hyderabad. So also in Mumbai, I think there's a lot of projects that get launched here in all these three cities. And if NCR approval comes, even NCR will come in.
Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you so much for your participation. It was, as usual, interesting, and we quite enjoyed answering the questions. Of course, Amit and Venkat and the rest of the team are available for any clarifications you have any time. We'll be more than happy to answer.
Thank you, everyone. An interesting conversation, and I'm sure all of you will appreciate whatever we have done yesterday and reported will benefit the company immediately and also in the long run, given what we are doing and given the fact that there is no land available in these locations. And residential is also looking very good. We look forward to your continued support, and we'll continue to do transactions that are value accretive and which help grow the company to the next level. All the more exciting next year is going to be because it will mark like the way last year marked our entry into Mumbai. Next year will mark our entry into NCR. We look forward to your support. Thank you very much once again.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.